Good afternoon and welcome to the CENTAMIN PLC Q4 2022 investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted anytime by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Martin Horgan, CEO. Good afternoon to you, sir.
Good afternoon and thank you. And good afternoon, everybody. Thank you for taking the time to dial into this afternoon to this retail investor presentation. Thank you for submitting those pre-submitted questions. We've got a lot, which is great. We had prepared some slides, which are on the screen, as you can see now. But given the volume of questions that we have and given the sort of time that we have, that I think rather than sort of do a slide deck page turn, which I'm sure everyone's pretty familiar with the story, having seen the various presentations we've given previously. What we thought we'd do as a slight change is that we would I'll give a quick 5-minute overview of the of 2022, 2023, and then get straight into the questions. And I think that's probably a better use of time for everybody because I think there's lots of questions, and I think that would give us a chance to answer as many of those as fulsomely as we can. So really, we start then looking back to 2022. Those of you that may have dialed into our webcast this morning, look, I think it was a great year. I think we had sort of three strategic goals in mind. Firstly and foremost, delivering to guidance, both in terms of ounce and costs. And I'd like to say that first and foremost, we did that safely. We managed to set the site record of 8 million hours LTI free. And as I mentioned this morning, I honestly believe that a safe site is a proxy of being a good site, a well-managed site. So delighted with that. And they met the ounce guidance, 430 to 460. We came in at 441 towards the middle of the range there. And delighted with that progress, and especially in the context of the swap out of contractor in the underground mining to owner mining, the accelerated waste stripping program as well. So delighted that we were able to sort of meet that guidance range. Despite the sort of the challenges and the opportunities that we faced in the year. I think from a cost perspective, I think Ross and the team did some very prudent budgeting for the year. I'm delighted to say that we're one of the few companies that didn't have to re-guide during the year in terms of our cost forecast. And despite those inflationary headwinds and global sort of pressures across the industry, is that we're able to both bring in both cash costs and all-in sustaining costs as well. So delighted with the delivery, both on ounces and costs. From a project basis, again, a really busy year. Lots of those key strategies and initiatives dropping during the year. I think, the fourth quarter, as we talked to, some real highlights coming through there. The commissioning of the solar plants, big benefits, both in terms of cost savings, but also carbon emissions. And I think that's been a huge success. Staying at Sukari, further resource reserve growth. We put a lot of focus on geology back in 2020 when I joined, and delighted to say a second year of reserve growth, even including depletion. So net of depletion now, we've added nearly 2 million ounces to the reserve base over 2 years. And I think that's fantastic to see. And of course, a large portion of that reserve growth came in the underground. That allowed us to give us the confidence to step away from underground contract mining, as we flagged earlier, but also underpins our belief in the ability to expand the underground. And of course, in the fourth quarter last year, we demonstrated that work that shows a low capital, low technical risk implementation basis to expand the underground by up to 30% of volume moved. And those ounces will play a key part in returning Sukari back towards that 500,000 ounce target that we would like to see on a sustainable long-term basis of the balance of the mine life as well. In terms of other opportunities there, we're looking at for both costs and production. This year, we're looking at things like the gravity circuit, expansion of the dump leach to improve ounce production, and of course looking to manage costs further by things such as the grid connection as well. So I think 2022 was a great year. Entered some really good momentum into 2023. I think the team's doing some excellent work, and as we look at that, that's given us the confidence to increase guidance again for this year, targeting 450 to 480,000 ounces, with a commensurate step up in production predicated on the underground operation, hitting those productivity targets that we believe are achievable. We're actually achieving them now over December and January, and that allows us to get that additional ounces out and bring us back towards that sort of 450 to 480 guidance range. I think then stepping away from Sukari, we look at the Eastern Desert Exploration Program. We commenced that work during 2022. Delighted with the work, the way it's gone there. We've done quite a bit of desktop work prior to field work starting. Delighted with the early stage work that's going on there. The guys are out in the field. They're very busy, clearly focusing initially on the areas proximal to Sukari, trying to find drill targets that could become satellite feed, and also looking at the Umrus block, which is slightly further north for standalone opportunities. We'll move to the third block, Naj, this year with the cooler weather. But what we're really hoping to do, of course, is work up some drill targets and start looking at drill testing those this year and trying to fast track that process as well. Pivoting to West Africa, Europa, great progress. Again in Q4, announcing that resource update and upgrade, to my opinion. So the infill drilling was hugely successful, confirmed, the ounce profile in terms of ounces in the resource base, but nicely with a nice sort of 20% uplift in grade as well. And grade is key in all of these operations around sort of generating cash flows. Identified those opportunities to reduce both OPEX and CAPEX through changing the process flow sheet. And while that's caused a little bit of delay to the PFS delivery, we think the opportunities that could derive are well worth a delay, both in terms of CAPEX and OPEX savings, as I mentioned. So remain on track to deliver that PFS first half of this year, and then stepping into DFS with a delivery date of first half of next year, which is inside the permitting timeline that we have in place at this stage as well. Corporately, I did touch on the Eastern Desert exploration field work. In parallel, we've been busy in Cairo dealing with the ministry as part of an industry group looking to finalise terms in Egypt for the long-term exploitation regulatory regime. Very close to finalising that now. Those that may have picked up that the Minister of Petroleum, His Excellency Tariq El-Molla, mentioned at the recent Future Minerals conference in Saudi, Riyadh, that he believed that we'd be in a position to announce terms by Indaba, which is in February of this year as well. So getting ever closer and hopefully looking to close those out. And of course, the final thing then was the signing of our inaugural $150 million RCF debt facility. We inked just before Christmas, and that gives us a lot more financial flexibility and robustness as we look to deliver both growth while maintaining a dividend policy for the business as well. And I think that gives us a lot more sort of financial robustness and flexibility as we step into 2023 and beyond. Slight subtext to that is, as well, is that bank lenders are incredibly detailed in their diligence. And I think one of the things that, with 4 leading international banks that are very experienced in mine lending, that they were sufficiently comfortable with our plans and due diligence that we're able to lend against our mine plans as well. So I think that's great to see that external validation of the work we've been doing over the last 2 to 3 years, and so much so that 4 banks are prepared to lend against those plans as well. So I think that was a great piece of work for us as well. So look, delighted with 2022. I think the team in place that we've been sort of building up and refining over the last 2 to 3 years, I think we've got a great team right across our operations, from Sukari to exploration to West Africa. I think the corporate team's in a great position right now, and I think we've built a fantastic foundation now with a focus on delivery, that now we can look to sort of develop the business from here. And I'm very much looking forward to 2023 with a sense of excitement and momentum as we build from there. So maybe as I'll hold it there, Alex. I think that's a reasonable overview of where we are. I think it'd be great to now try and maximise the time we have for the retail investor questions to make sure that we cover as many of those as possible. So with that, Alex, I'll hand back, and myself and Ross are ready and available to answer all any questions that people have as best we can.
Great, thank you for that overview. Actually, I'm going to start with one that just came through on the real-time platform, just because it's a good segue from what you were just talking about. So it's a little bit long, so bear with me. But you mentioned on this morning's call that the Sukari asset at the end of life transfers to the Egyptian state. Please, could you elaborate on how this works? And does this apply to the new concessions, or do the new laws change the way that whole structure works? And then really, their conclusion, if it's what they think, is does that mean that Sukari should be looked at completely separately from other CENTAMIN assets?
Okay, so the way the concession agreement works is that sort of SGM, the operating Sukari gold mine, the operating entity in Egypt, that is the thing that we jointly own and operate with the government through EMRA. In terms of the cash flow sharing mechanism, I think that's well understood. But in terms of capital projects, the deal has been and always has been this way with the concession agreement, that CENTAMIN is responsible for paying for those or funding those capital investment projects, but then importantly, fully cost recovering any expenditures. So let's use a recent example, the solar plant. So that was about a $36 million investment for Sukari, and that was fully funded by CENTAMIN effectively to do that. However, of that $36 million, we will recover the $36 million on a 3-year basis. So we get $12 million a year back. So all that capital that we've got to put in, we get back fully over time on a 3-year repayment basis. That asset then effectively belongs to SGM. We've cost recovered it. It belongs to SGM. SGM has the right to use those assets for as long as they are serviceable, as long as it desires to do so. And at the end of the asset life, so that could be during the operating phase that a truck is just basically sort of, used up and is now scrapped, or at the end of the mine closure, at that point, is that all assets then effectively are transferred to the state. So, one might look at, like some underground equipment more recently, as it's reached the end of it, or a Toyota Hilux, we buy that. The mine uses it until it effectively sort of breaks and falls over and can no longer be repaired, and then that scrap value is handed over to EMRA. So that's the way to think about that. Ross, I mean, pretty much in a nutshell, without getting into the sort of the minutiae, that is the deal that we have with EMRA that has worked incredibly well over the last sort of 10, 12 years of operations, and that's how it works. So that's the current concession agreement, Ross, in terms of the construct between ourselves and EMRA.
Absolutely, Martin, and yeah, it's a cost recovery profit share arrangement, and those amounts that are financed are cost recovered. Some over the 3-year period, as you mentioned, in terms of capital. Other costs are recovered in the period that they incurred. But you're absolutely right. It's cost recovery and then a profit share, and that profit share is split equal 50-50 going forward.
So that's how it works in the concession agreement. I would be fair to say that under the new regulatory regime, as part of the new license blocks that have been awarded, that concession agreement style doesn't apply. So the new blocks, obviously they're not in partnership with EMRA. It's not in partnership with the government. The government has an economic interest through royalty and net profit interest and taxation, but that would that is more aligned with other mining jurisdictions as well. So I think that kind of asset acquisition, cost recovery, and asset allocation after useful life back to government, that is a peculiarity of the Sukari concession agreement. It's worked very well and continues to work well, but the new blocks that won't be applied to.
Okay, thank you very much. So a couple of questions that came in around the contract waste stripping, the waste stripping contract with Capital at Sukari. Starting with the first one, how much has it cost shareholders to date?
How much does it cost shareholders to date? So cost or how much have we spent on waste stripping with Capital? Is that a better way to think about that in terms of the in terms of the cost there? Well, look, I think to date, if I'm and Ross, correct me if I'm wrong, that is about $115 million have been spent to December 22 in terms of the Capital waste mining contract. It's about right, isn't it, Ross?
That's right. So the contract waste stripping that we've actually capitalized is that 115, and we've got another 78, as you'll see in the RNS announcement, that we're planning to spend for 23. But to date is 115. That's capitalized. Yeah.
Okay, thank you. And I mean, I don't know whether you want to take the opportunity to take it further as to what that actually, what's the objective of that for the company?
The waste stripping.
Yeah.
So look, as we know, the sort of the waste stripping completed by the company over the period 2017 to 2019 was below the life of mine strip ratio which was evidenced in the 2015 life of mine plan that was in a 43-101. So the company ran at about sort of 3 to 3.5 to 1 strip ratio when the life of mine plan called for a consistent strip ratio of about 6.5 to 1. So clearly, over that extended period, there was a deficit in waste moving, which, in terms of compliance to a long-term plan for a large open pit like Sukari that you've got to do. So really, the purpose of the capital contract is to effectively catch up that deficit in waste mining that took place over 17 to 19, and effectively return the open pit to be in compliance with its long-run average life of mine strip ratio. So I've used this analogy before. It's a bit like a cricket one-day match. If you need to score 6 runs and over to win the match, and you've scored at 3 runs and over, you need a few overs at 9 runs and over to basically get yourself back on the target run at 6 runs and over. So it's broadly similar to that concept. So really, that capital sort of contract, that waste stripping that we're doing, it's about catching up that deficit and returning the life of mine plan to be in line with its, on an ongoing basis, with its average strip ratio as we balance over the next decade, as we mine out the balance of the open pit as well. So it's a bit of catch up. We'll probably get a little bit past catch up and go slightly ahead, as that gives us some operational flexibility down the line. But really, it's about sort of catching up that deficit for about a 3.5 year window, where the mine open pit was effectively ran below what it should have done in terms of the average strip ratio.
Great. And just for clarity, when do you expect that contracted waste stripping program to be completed?
So at the moment, it's a fixed volume contract. So we gave, when we tendered the contract, we developed a detailed sort of plan of waste movement that was required to be moved, including haul profiles and waste dump profiles for that as well. So it's a fixed volume. And part of the tender process was to demonstrate how they could do that and the time frame over which where they would do it, and the types of equipment that the various contractors would propose to use. So we actually tendered that on a fixed volume basis. All the contractors that put their bids forward were all within about 3 or 4 months of each other, using standardized equipment, standardized digging rates, with defined haul routes and profiles. Is that, as you'd expect, competent contractors would all be about the same. So we've on a fixed volume basis. And that was about just over a 3.5 year program to get that volume moved effectively. So as we sit here today, we're just over sort of 2 years into that overall profile, and we've got about sort of 15 to 18 months to go, and then the capital contract at current mining rates then will come to an end.
Thank you.
Alex, I'm sorry to jump in, and Martin, apologies. Those numbers, in terms of capitalization of the 115, there was actually additional startup costs and things, so it is a higher number. It's closer to that 140 odd million inception to date. So apologies for that.
Thank you for clarifying that. Yeah. And then a question that has been raised a couple of times was: has Capital or Jamie Boynton ever paid CENTAMIN a finder's fee or equivalent payment in connection with this the award of this contract?
Oh God, no, absolutely not. No. Look, in terms of the process, it's a process I'd used previously at Toro, for example. So whether it's the underground contract for going owner mining, whether it's this waste contract now, whether it's the grid line that we're looking to do, is that under the terms of the concession agreement, we are required, and it's from the concession agreement, but also it's good practice from an industry perspective to go to tender. So to be very clear with this waste mining contract, and it was similar to the underground decision as well, is that we developed a very, very detailed RFP of volumes, bench by bench volumes with associated haul profiles to waste dumps as well. So we developed a very detailed physical schedule. We then develop a set of standard terms and conditions that we believe are appropriate for this style of contract. And then that document is sent to a number of parties that have pre-registered interest to get involved with the waste mining contract and the similar situation in the underground. That RFP, that request for proposal, was developed in part by our in-country or operational team with the use of a third-party industry expert from Perth, Australia, a very well-known and respected individual that's worked on a number of open pit contracts across Africa and Australia for 20 odd years plus. And we put together a fully detailed RFP. And I think we had 5 different international and one domestic group be interested in tendering. So that process then was put forward. So effectively, you've got a bunch of pre-qualified groups that we believe have the capacity with which to execute this style of project. And then on top of that, they then submit commercial offers by a deadline date on a sealed bid basis, on which our independent sort of, a consultant helps to then sort of independently review and make a recommendation, not only to the CENTAMIN management team, but also the board of CENTAMIN, and ultimately, importantly, to EMRA. We had to demonstrate a closed bid basis, the offers as well. And those offers are evaluated on technical and financial capacity of the contractor, execution capacity, and of course, price. So I would say that the process that we undertook at the waste mining contract, similar to the underground, similar as we're doing for the grid power connection now, as we did on the solar, it's done to international best practice with detailed RFPs and on a pre-selected bidder basis of technical and commercial capacity, and then is done on a best efforts basis. So look, that's the process we undertook. Within that, I think capital were one of the winning bid. I can say hand on heart, with all honesty, that absolutely nothing was done in terms of any inducements either way to get capital in there. I think, to be blunt, and I've said this before on previous calls, is that capital are hungry to develop the mining side of their business. They've obviously been focused on drilling historically. They know the Sukari site. They know Egypt particularly well. And therefore their sort of, competitiveness of understanding how to operate in Egypt and what the genuine cost base are, put them in a very good position. And their ability to operate some minor contracts in West Africa evidenced a reasonable sort of mining capacity. But I think then the commitment to sort of ramp up their team, they pulled in a number of very experienced individuals to manage that business, is that they actually beat two a very qualified sort of more, shall we say, sort of recognised mining contractors, I think, based on their Egyptian experience as well. So look, I think very, very clearly, I am very, very sort of relaxed and happy that we followed a very detailed and very sort of rigorous process around the tendering. Capital won it purely on merit. EMRA and our board of directors wouldn't have allowed anything else to happen that way. It was we shared all the information with EMRA for the various bids that were received, and absolutely not. And I find it slightly distasteful that there'd be some implication that we'd take some sort of backhander to give capital to work as well. So look, I think that was that process was fully auditable, fully transparent, shared with government, and I think fair play to capital. They won that on their merits, and fair play to capital since then. They've also stepped up and delivered against it. So I think it's actually been a good result for us, for CENTAMIN, and obviously it's been a very good result for capital as they're looking to expand their franchise into mining away from purely drilling services as well.
Thank you for clarifying that, and sorry for having to ask.
No, right. Look, this is the point of this forum, is that let's get those questions out there, and you sense a little bit of frustration from time to time, so let's have an opportunity to knock those on the head.
Thank you. When will shareholders see the airborne survey, the 3D seismic survey, and the step-out drilling?
So airborne survey, that is currently undergoing processing by a third-party specialist geophysical advisor. I'm not sure that we will actually share that information publicly. We wanted to test the Sukari concession with this airborne survey to see if there was other potential targets within our concession. Clearly, a benefit of doing that work for us was that we then also got a very, very good fingerprint on what the Sukari mineralization looked like in these various airbornes of mag radiometrics and V10. So we kind of got the DNA sequence or the fingerprint of what our deposits look like. And that information is hugely valuable to us when we think about exploring, the areas outside of Sukari. And that proprietary sort of information we have is very valuable, and we'd like to maximize our commercial use for that. So if we publish that, we're kind of letting everybody else know, what to look out for, what to do, and we're not overly keen on sort of giving our competitors commercially sensitive information. So we can and probably will in the future release, shall we say, some dumbed down versions of that, but we certainly won't be making the full data set available publicly, because we believe that's proprietary information that we have, that we paid for, and we'll use that to our competitive advantage when exploring Egypt as well. In terms of the 3D seismic survey, that was never actually undertaken to the best of my knowledge. Certainly since I've been on board since April 2020, there was some 2D seismic work undertaken. There was some 3D seismic work mooted. Quite frankly, it was horrendously expensive, and we weren't sure it was going to give us any benefit. So we dropped that. I think it was like a $10 to $12 million program, and we moved back to what I consider to be sort of the gold standard approach to geology. I touched on the fact we've added 2 million ounces to reserves over the last 2 years. So I think I would say the proof of concept there is that we made the right decision to pursue a more rigorously structured approach to how we do the ore body geology, and that's more than paid results. So correct me if I'm wrong, Ross, but certainly not on my watch. There was some seismic work done, but not the 3-day seismic, and I didn't see that as a particular good use of shareholders' funds, because quite frankly, I don't believe it gives us the results that we've been looking for, and we've spent that money better to increase the reserves through normal sort of industry processes.
You're correct, Martin. There was 2D, not 3D, and the $12 million was cut when you arrived. So absolutely.
Yeah. And in terms of the step out drilling, again, sticking deep holes, slightly sort of Hail Mary type holes along the extension where they're $500,000 holes and you're drilling slightly blind. Again, in our opinion, not a good use of shareholders' funds. It's highly speculative. You can waste a lot of money drilling a hole that's not productive. And we believed in the approach that we've taken in starting from the known areas and working your way out from those known areas, having understood the geology is the better way to go. And again, I refer back to the 2 million ounce added reserves that I think that's a better use of funds. So airborne survey done, completed. It's proprietary. We're unlikely to share that data set publicly because of the competitive advantage it gives us. 3D seismic survey never completed, was stopped because we just didn't see it as a good use of funds. And the deep step out drilling, again, 1 or 2 holes were done, but we stopped those. Again, we didn't see that as a good use of shareholder funds, and reverted back to our more sort of industry standard approach, which I think has paid dividends for us.
Thank you. Is the Europa PFS delayed because the exploration permits have expired? If so, when were the requests made to renew them?
Okay, so simply no, they haven't expired. We wouldn't be spending money and time and effort if we didn't have valid permits. Côte d'Ivoire, under the Francophone system, has a similar style of code to other West African jurisdictions. So in the Ivorian sense, it's 3 lots of 3 years. And at the end of the year 9, if you're in the process of finalising your study work, you can apply for under the code. So this is not a ministerial request. This is within the code. You can apply for a 2-year extension to finalise technical studies on discoveries which you've made. So where we are right now is that we have a permit valid until mid 2024, and the current PFS and DFS timelines are scheduled to enable us to provide both an ESIA, an environmental social impact assessment, and feasibility study to meet the permitting deadline, which is mid 2024 as well. So no, we wouldn't be wasting cash if we didn't have live permits. We have a window with which to complete that, programs in line to complete that, and meet those timelines as well. So people are happy to have a look at that if they like, and look at the relevant Ivorian code. But no, we are valid through to mid 24.
Thank you. Have CENTAMIN had any discussions on partnerships with Barrick and B2 with regards to the exploration licenses awarded in Egypt?
I'm assuming we're now pivoting back to Egypt, the EDX, Eastern Desert Exploration. No, is the simple answer there. We obviously, as an industry group interested in Egypt, we have commonality of cause and interest around finalising the mining code terms. So certainly we have common interest to present a unified industry front to engage with the minister and the ministry around making sure we have correct terms. Quite frankly, we know Egypt, they don't, so they'd be looking to lean on us. We've got a very experienced exploration team with multiple successes behind Howard Bills, and then obviously Craig Bark and the MRM. And we've obviously got financial capacity to do that. So no, we don't need anybody's help in Egypt. Quite the opposite. I think they probably want more help from us. But no, we have coordinated and worked as an industry group around sort of the regulatory regime engagement. But from an operational technical perspective, no, I think they probably need us more than we need them. So we're happy to sail our own ship.
Thank you. Has Centamin's board reversed its policy on gold sales, hedging, forward contracts in order to secure the new bank funding?
I can say categorically no. Myself and Ross, I think, lifting the veil very, very slightly, during the board discussions that we have from time to time, we discuss a number of options, and one of the options discussed previously was around gold hedging, and fair to say that conversation was not pursued at that board meeting. So no, absolutely not at this stage. There has been no prior discussion or detail around that. Look, that's the board present. I would say personally that I think that hedging as a risk management tool has a place to play. If I think about the Europa going forward, if we were to project finance the Europa around the development of that, putting some hedging in place to de-risk the gold price during the early years of project commissioning and startup, I think that's appropriate. So on a personal basis, I think hedging can have a role to play in risk management for well-run businesses if used appropriately and matched to correct purposes as well. So I think at this stage, as a policy, no change from Centamin. Down the track, as we look to potentially invest in projects like the Europa, for example, then I think there is an opportunity to have a sensible and prudent discussion for that. But to be clear, matching any hedging to a defined investment and then as a risk management tool as well. But we're not going to find ourselves a la Ashanti or Barrick running a corporate hedge book and putting speculative positions in place around the gold price. If we did do that, it would be around a specific investment criteria for defined projects.
Thank you. When does the tax concession for Sukari end, and is it to be extended?
Ross, correct me if I'm wrong, 2024, I believe, 15 years.
End of 24.
Yeah, end of 24. So that's when is new. I think it's important people should understand that the tax concession, and again, I'll bend the knee to Ross here, is that the tax renewal will be given as a matter of course, unless there are outstanding tax disputes or we haven't explored the concession. So it's a positive requirement for the government. They will renew it, is how the concessions are drafted, unless there are outstanding disputes or we haven't explored the concession. Now, at this stage, all our tax compliance is 100% signed off. We're under no sort of litigation or engagement with the government around that. So that isn't on the table. And as we've evidenced, with the airborne survey plus the work we're doing right now, we're fair to say we have fully explored the concession. So at this stage, it is a process we have to execute. It's not a case that we have to apply for it. The concession says that the extension will be awarded unless there is a reason not to. And the two reasons that might hold it up at this stage, we're very comfortable that we are in compliance with those requirements. Is that a fair summary, Ross?
That's correct, Martin. And it's 10 year, further 10 years. So it's completed 10 years and another 10-year extension.
Yeah.
It's a big question. What are the company's thoughts on global inflation?
That is a big question.
Sorry, I'm being slightly jovial. There are two further bits to it. Is how are the company budgeting and trying to counter those inflationary pressures going into 2023?
Okay, well, look, I'll say a few words and pass to Ross. Look, inflation is clearly very real, globally and specifically within Egypt as well. In terms of what we've seen on the ground is that we saw the second half of 21 has really started to come through. We saw some further sort of inflationary pressures coming through first half of 22. And then actually, I would say that from sort of mid 22 through to the end of the year, we've not seen the rate of change of inflation increasing. I don't think we've seen it come off, but we've not seen the rate of change of that increasing. So I think that where we are now is probably in a period of stability relative to the end of 21 through to early 22 as well. I would say more broadly that I'll let Ross talk about information we use to then roll forward for planning purposes. I would say that as I joined in 2020, Ross was already championing a cost savings program even before inflation raised its head. So I think at Centamin we were already starting to address cost saving measures as a matter of good business, as a matter of course. And we're looking to deliver some of those cost savings and have started to do so. So it's not that we kind of, inflation arrived and we reacted. We were already getting on the front foot around it. The solar project's a great example of something we committed to pre-inflation becoming an issue, and clearly it's had a really nice impact on our cost base as well. Swapping out the underground mining contract to owner mining, that's obviously a big benefit. Things, smaller initiatives like the tyre bay and so on as well, the high production, high capacity truck trays giving us productivity gains. So I think we had a culture of continuous improvement and cost efficiency before inflation. And I think because we started that process maybe a year, 18 months before inflation became an issue, is that I think we were well placed to actually navigate and ameliorate a number of those impacts as well. So that's probably a bit of an overarching view. But Ross, in terms of best information and rolling that forward.
Thanks, Martin. Yes, so in terms of the budget process, we've replicated what happened last year when we entered this global environment, and we zero-based budgeting, but we really took the exit prices that we've experienced last year and used those as a roll forward. And that's really a proxy in terms of building in a lot of the inflation pressures, taking into account all the cost savings of the various productivity initiatives. We've then scaled it back. So a lot of the actual usage and units have gone down, but obviously the prices. So for instance, cyanide, caustic soda, grinding media and the like, we've used our current prices that we've built into that. I think some of those key inputs, and Martin's mentioned fuel, I think that we must remind everybody that we use an awful lot of fuel. There's circa 200 million litres of fuel that's used across the mine site last year. And the fuel increase, we saw an average price increase from 2021 of 52 cents a litre up to 89 cents a litre average for the year. And that fuel price actually peaked at another 20. So for the cost mitigations to come in and come in, it was a great credit to the team in terms of an additional circa 70 million or $80 million of fuel going across the business, being spent on the business, and being able to offset that with some of these cost initiatives has been great. But we've used the same strategy going into 2023. We've been prudent with it. We can only deal with the outlook as we see today. And we're cautiously optimistic that we're going to be able to mitigate a lot of these headwinds. And equally, the exchange rate variances. As many would have seen, the exchange rate, the EGP, is almost halved over the last year. It's moved from 15 to 1 to just under 30 to 1. And we've got to ensure that whilst we budget all our cost metrics in US dollars, that local EGP component is very important in terms of how those metrics unfold. So we're confident in the numbers, cautiously confident, and I think we've been prudent in our approach, and it's certainly very balanced.
Thank you, and you just touched on it there, which actually segues nicely into another question: is how is the Egyptian economy affecting the business? Citing that this individual had read an article on the devaluation of the Egyptian pound against or lack of US dollars in country.
Well, look, I think first and foremost, I think we've seen lots of chat around sort of restrictions on FX from Egypt. Use of letters of credit, boats being bunged up in terms of importation. So look, I think people need to, the group needs to understand this, is that, we are a US dollar denominated business. We sell doré internationally and receive US dollars. Those US dollars come into our Egyptian bank accounts or into the Egyptian bank accounts. We then have USD onshore. We're then able to use that to pay international creditors. So we're buying cyanide internationally, overseas contracts, we can use that. We buy EGP in the local market to pay locally EGP denominated costs on that basis. We pay our royalty on that basis. And then when it comes to profit share splitting between ourselves and government, we do that on a US dollar basis as well. So we hold dollars. So we don't, we have access to US dollars onshore. That's enabled us to continue to pay all our bills internationally using dollars. We've not been restricted. And because we have our own USD, and because of the concession agreement, we've not had to have the sort of the control using bank LCs to do that. So we've seen sort of lots of chatter around what does it mean. Just to be very clear, we have operated uninterrupted, unchanged basis over this sort of liquidity crunch in Egypt without any impact, and that's a function of us having US dollars and doing that as well. And the government's very happy, of course, because we're providing USD to the central bank through in terms of sharing royalty and profit share, and also those purchases as well. So from an operational perspective, we've been unimpacted in terms of flows of funds and haven't seen ourselves restricted from making purchases or operating the business as normal. I think that's really important that people need to understand, is that we're in that position that we don't, for example, in West Africa, in certain jurisdictions, you sell your gold for US dollars, you have to bring that US dollar on shore, you have to convert it all to local currency, do all your costs in the Francophone CFA, and then reconvert back to dollars. We don't have to do that. We do everything functionally in dollars. We hold them on shore and then can distribute them back to corporate that way as well. So I think that has been a really key point for us, that we've not been impacted on that. Again, is that fair to say, Ross, in terms of the operation side of life from an Egyptian perspective?
Yes, I think that's absolutely correct, and equally credit to our partners, EMRA and government, in helping us navigate that. So it's not peculiar to us or Egypt. The challenges that we've seen are the challenges that are seen broadly in terms of logistics and supply chain and the like.
Thank you. And actually, just staying in Egypt, and again, thank you, Ross, you keep segueing wonderfully on, but are you experiencing any supply constraints beyond those that are kind of documented? I know, Martin, you just touched on that.
No, I think that's an easy answer. No, I think is the answer. Obviously we're seeing international sort of, freight's a little bit slower, freight's a bit more expensive. That's a global issue. That's not an Egypt or mining issue. For example, the paste fill plant, that's probably a month, 6 weeks tracking behind original schedule due to sort of delivery, but that's not Egypt. That's kind of just global supply. So outside of what would be global conditions, nothing specific to Egypt, and nothing that we can't navigate as well. It's interesting, Alex. We chatted to some people the other week that rather perversely, sort of COVID almost got us match fit. So when COVID bit, we had to think about sort of diversification of supply chain. We couldn't rely on a single supplier for cyanide or whatever it might be. So we diversified the supply chain. We also looked at then securing some slightly longer contracts to make sure that we had a surety of supply. We looked at sort of stocking and working capital levels. Previously, if you're running in a world that works on a just-in-time basis, that you can have confidence that if you need something, you can get there. But during COVID, we looked to increase sort of working capital levels around stocks. So kind of perversely, coming out of COVID, as this sort of inflationary environment and sort of global sort of supply side sort of interruptions or constraint, actually we probably found ourselves more match fit and ready to deal with that because of COVID. I mean, I don't know what you think, Ross, as a sort of almost a kind of slightly perverse benefit of COVID was that we were able to deal with these issues, I think, more easily given the experience we had.
That's right, and being forced to make a plan and look for alternative suppliers has put us in a good position on that. I think your point of working capital is very valid. One in terms of an increase in dollar value on it, but making sure that we've got a robust process that we can navigate some of these challenges.
Thank you. So we've probably got about 10 questions left, and conscious that we're running out of time. So I'm going to try and get through so quickly. So Martin, you have answered this several times before on email, but what, if any, are the potential impacts on sentiment following curbs imposed on gold exporters by Egyptian central banks?
Okay, I think there's a bit of a misconception here. Yes. We understand that that's to do with the Egyptian jewelry retail sector. So that's not us. We've got an offtake with Asahi in Canada. They export. We export our doré with them and repatriate those dollars. So any curbs that you see around gold and so on and so forth, that applies to the jewelry sector and not to us as a doré producer and exporter.
Wonderful. And then Ross, just stepping back to cost quickly, what are the main cost saving opportunities that you're going after this year and next?
We've got a number of exciting initiatives, but I think the key one for us, and personally, I'm very excited about the ability to tie into grid. So, that's still got a little way to go this year in terms of tenders and tie-ins and the like, but the ability to tie into the grid would make a huge impact on our cost. We talked about fuel, the fuel usage, the fuel costs and the like, but being able to take a serious dent and a further step forward, that is one of the very, very exciting opportunities. And then we've got gravity circuits that are going forward. We've got continued optimization plans across the business. So there's a number of smaller projects that continue, but I think for me that the power and the grid power would be the most important.
Thank you. Then slightly moving on to more strategic questions. Despite the 50% increase in the share price since October 2020, does sentiment feel vulnerable to a bit?
Probably less vulnerable, actually. I would say that sort of, when we're down at sort of 80p, we could all see the inherent value in the business. We understood, where it was going. We understood that market wanted some confidence and delivery as well. So if you'd asked me honestly, I was probably a little bit more nervous at the 85p level because I think we could all understand what the value of Sukari, EDX, and West Africa is, and I think that was fairly reflected. With the appreciation we've had in the share price, I feel less vulnerable now. We look less cheap, quite frankly. I still think it's a hugely attractive asset, and I still think there's lots more to come, as that we've evidenced as well. But no, I think that share price appreciation probably makes me feel less nervous that someone would opportunistically go, that looks a bit too cheap, let's have a bit of that. I think it's now we're getting towards fair value, from where we are. And I think then if somebody's still interested, which this is a tier 1 asset, make no bones about that. It's a tier 1 asset with a long life ahead of it. It's strategically important in an emerging jurisdiction of the Arabian-Nubian Shield. I still think that this is a nice habit. It's a great platform for us to build on going forward. But yeah, I feel slightly less vulnerable with a more reflective share price of where we are.
Thank you. And what is Centamin's M&A strategy to deliver on its ambition of being a multi-asset, multi-jurisdiction producer?
Well, I think that I mentioned before that the banks have done their due diligence to be able to lend to us. So I think that evidence that we're diligenceable. And I think if we're looking to go out and do deals to try and build our portfolio, and assuming we're not just going to pay cash for things, I think we can now got a bit of confidence that if we're talking to third parties, that we've got some confidence in our paper and its value and our ability to demonstrate that. So I think that should just be borne in mind. Having said that, we're not about to run out and blow our brains out. We've got a lot of embedded growth optionality in the business, at Sukari, EDX, across West Africa. We've got lots to deliver and value to create for our shareholders by delivering that potential. Having said that, we're always going to remain opportunistically looking for projects or companies that would make sense to bolt onto us. So I think we keep an opportunistic watching brief to the market to see if we can do that. Where are we going to go? Look, to me, the kind of the north south from London, Jersey makes sense. Africa, the Gulf, Europe, as far as Turkey and up into Scandinavia, that feels like it's a natural sort of playground for us. Within that sort of area, there's certain places we're not going to go. Mali and Burkina are two obvious places where I think you've got to be comfortable around security, political risk, and an investment tenure. There's other places we'd be happy to go. So I think within that sort of large geographical area, we'd look to target those jurisdictions where we've got confidence on a medium to long term basis, alongside good geological potential as well. So no immediate plans to go out and blow our brains out doing a crazy M&A deal. We don't feel pressure to do that. We don't, we've got enough to do and keep delivering. But opportunity watching for opportunities if they come along. Then I think we're now in a position where we could start to consider them if they made sense.
Thank you. What are your thoughts on Ma'aden's announcement that they will be entering Egypt's gold mining space with the backing of PIF, the Sovereign Wealth Fund in Saudi?
Look, I think we've been quite clear all along. One of the questions we get asked a lot at investor meetings is, we're the only company in Egypt. What's Egypt like? Is it okay? People are naturally curious around understanding what's the Egyptian environment like, and we have to be the flag bearer for that. So look, the more investors and the more companies we have in there, we think that's good. It gives evidence and weight to the credibility of Egypt. The more mining companies you have there, all of a sudden there's 4 or 5 drilling companies. There's different dealerships for different services. There's a bigger pool of talent in there as well. So I think that the more the sector gains critical mass, the easier it is for us to operate in country. You know, when you're the only company in country doing this, you know, it's hard. So look, I think, you know, we've seen Barrick and B2 pick up ground as part of the last bid round. I'm sure if we agreed terms with the government, as I believe we will do, I think other entrants will come. And if one of those entrants is Mardin, then fantastic. You know, the more the merrier for us from an Egyptian perspective, and to really get this sector, you know, moving in country, for it to get some critical mass, and for us to have a seat at the table politically as an industry group, I think is great. You know, so yeah, look, absolutely. As long as they don't go and poach all our staff, then I'd be more than happy with that. With you.
Don't wave a red rag to a bull. For a highly progressive company like CENTAMIN, what are our future ESG plans?
Well, look, I think that's right. I think ESG is clearly you know, quite rightly sort of front and center for you know, pretty much the world right now. A lot of the major investors, whether it's BlackRock with their net zero commitments, whether it's VanEck with the responsible gold mining principles, you know, these initiatives are rightly, you know, very, very near the top of the screening for investment in companies as well. So one, I think morally, as you look at yourself in the mirror in the morning, brushing your teeth, I think, you know, it's incumbent on us to you know, to do the right thing, to look after future generations. Two, our investors are expecting to see it as well now. So the idea of, you know, ESG being a nice to have, that ship has sailed. It's an essential part of your business. So I think, you know, first and foremost, it's core to our business case. It's core to how we operate and how we think about operating as well. So, you know, internalizing that approach is been key in the last 2 or 3 years. You know, we've retained an emerging and growing ESG team. I mean, it sounds like it's 3 or 4 people corporately, but we've added some real horsepower in there as well. And then it's about sort of, you know, from where we are with our journey, it's about, at the moment, we are, you know, framing what is the baseline that we're at now. What is our, for example, carbon intensity? Where do we sit today? Water usage, power, all these types of opportunities. It's about setting the baseline. And then it's using science-based targets to then reduce those or improve those baselines as well. So I think the baseline work is done or thereabouts. The next iteration for us is then to demonstrate how we will then address and improve on those baseline conditions. So, you know, I mentioned solar before. That's a great example of you know, removing carbon emissions from our carbon intensity as well. Obviously, it comes at a fantastic operating cost benefit, a real win-win there for us. So we're at that stage now. So it's about developing a framework of deliverable science-based targets to demonstrate our, you know, sort of improving commitment to ESG targets. I think it's also linked in, you know, this revolving credit facility that we've signed up to that has sustainability linked elements to it. So again, the lenders will assess our criteria against 3 agreed initiatives. And if we beat those initiatives and deliver into them, then the debt becomes cheaper. And if we don't meet them or don't quite meet them, then obviously the debt becomes a little bit more expensive as well. So I think for us, it's about internalizing ESG metric or ESG considerations at the core of it. It's not an add on the side. It's at the center of our business. I think philosophically, that's the first point. It's about resourcing that up with quality people to do that work. It's about establishing where we are today and then having a realistic sort of timeline and series of targets to improve on that baseline. And I think we're in that phase right now of demonstrating where we want to be in the next 2 to 3 to 5 years as we go forward as well. So that's where we are. That's how we think about it philosophically, and that's what we're doing about it, boots on the ground.
Wonderful, and actually there was a continuation which if you don't mind, I'll just quickly answer that. Very kindly said, congratulations on your recent ESG achievements. If investors have suggestions for products and processes on ESG initiatives, who should they submit them to? Please feel free to send anything to investors@centaminplc.com, and you can also CC sustainability@centaminplc.com, and that will reach the right individuals or will be distributed internally. So welcome any suggestions there.
Absolutely, Alex. Yeah.
One that's just come in. The Burkinabe government made an announcement last week citing CENTAMIN as the license holder at Konkera Bati West. Do CENTAMIN still hold these licenses? I know you addressed this in the announcement today.
Yeah, no. So look, you know, when we got involved, or when I got involved, you know, we did a full review of West Africa. I think Bati West at that point, you know, it certainly screened below our sort of metrics as a project that would make sense for CENTAMIN in terms of scale, cash flow generation and margin and so on. So we felt that it certainly wasn't a Centamin opportunity as we saw Batty at that point. Personal view was that a junior company with a single asset and looking for a second asset, or a junior company that wishing to become a producer, maybe someone prepared to operate a 90 to 100,000 ounce mine, if they were to work really hard, maybe it could work. So we did go through a process of trying to find, groups that might like to take on Batty, realistically thinking about a 7 to 8 year mine life at a plus minus 100,000 ounces, in southern Burkina. So clearly that type of opportunity, it's not for Centamin, it's not for Barrick or B2 or any of these sort of people. We felt there might be an audience of that at the junior end of the market that might like to try and take that on and work incredibly hard to try and get something into production. So we started that process, and we had some interest, and we had some traction with some groups, and we're working through that. And then, of course, we hit the coup and the political and security instability in Burkina. And unfortunately, that process, of course, just naturally ground to a halt. Coupled with that, then we kind of found ourselves in limbo, with no government to engage with as well. We then came up against permitting timelines. And I think in the best interest of all concerned is that we reluctantly took the decision to relinquish those licenses, step away from them. So as we flagged, I think in the Q3 last year, that process of relinquishment back to government, we've not given to anybody else, is well underway. We've not had anybody at site since first half of last year, and we have filed that relinquishment notice to government. So yeah, they're not our licenses. We don't hold them. We're not operating them. We haven't done for some time. We tried our best to try and monetize some of the value in them, but given the circumstances in Burkina, it just wasn't possible to do that as well. So I think that was obviously, I don't think it's a perfectly functioning administration down in Wagga right now. So we were slightly surprised to see us being named in that, despite the fact that we relinquished those art licenses.
Thank you for clearing that up. A slight process one here. Why is the gold price assumption for the open pit mineral resource estimate set at 2,000, while the assumption used for estimating reserves is set at 1,450?
So, without wishing to teach anyone to suck eggs, resources are those things that have the potential to be extracted, whereas reserves are those ounces that you can demonstrate can economically be extracted. And obviously, so that's just the difference between resource and reserve. I think you're not going to plan an open pit operation based on the daily spot price as it moves all around. So like all companies, on a reserve basis, you pick a price that you believe on a through the cycle long-term basis represents an appropriate assumption. Now, Barrick used 1,300 for theirs. We use 1,450. That's where the market is. So you assume on a through the cycle 10-year.
Oh, I've lost sound. I lost you.
Hi there, Alex. Yeah, I think we have momentarily lost Martin.
Okay, I have found him again.
Can I steal your computer?
Yes.
That's fine. I'll just
Okay, fine.
Hi all. Sorry, my computer just crashed there. Sorry. So I've walked across to Alex's computer. We use a through the cycle price for long-term planning purposes, and in our case, we're using 1,450. In terms of resources, as I say, that is an assessment of an ounce that might have potential to be extracted in the future. And generally, companies set the resource estimation price, a fair bit reasonably higher than the reserve assumption. So when we look at our resource potential, we say that if we believe that that ounce, gold price might be at and stay above $2,000 an ounce over the next 10 years for a period. So those ounces have potential to be mined, and hence we use $2,000. But for our planning purposes, we think that 1,450 is an appropriate long-term assumption to use for reserves in terms of that mine planning. So that's why we have two different prices. One is for resources that might be extracted, and one is for reserves that we can demonstrate can profitably be extracted as well.
Are you able to hear us fine?
Yes, we can hear you perfectly.
Ali?
Yes, no problem, Alex.
Hi, Alex. I can
Hello.
confirm that we can hear you perfectly.
Oh, Ross, can you hear us?
Yes, we can hear you perfectly.
We might have to do it this way. Be an abrupt end.
Hi, Ross. One moment. We will just try and reconnect Alex to the call. Just request a control there, Alex. If we can just try and reconnect your microphone. Perfect.
Can you hear me?
Yes, we can hear you. Can you hear us again?
Yes. Were you able to hear Martin's answer to that last question?
Yes, we were.
Ah, marvelous. Okay, fine. We're going to have to do something a little bit hybrid and share these. Lost my train of thought here. So, next question is: have there been any cultural challenges as a result of introducing women at Sukari?
No, I think the simple answer is that with the change in law that was evidenced in 2021, we had a review of that. Barring the ability to allow women to work in an underground environment, women are pretty much free to work across the Sukari site as well. So I think with that change in law, we were very keen to look at that. I think one of the things that we felt quite strongly about is that we didn't want to just sort of see, house cleaning staff and kitchen assistants and when we think about gender diversity, it's got to be a genuine commitment to that, and hence we focused not only on sort of labour but also on professional positions. So that's been I think a hugely successful initiative for us at SGM. I think we're up to 25 professional female positions in the company. EDX similarly. We have a number, I think 34 across combined across that, which is great to see. There's been a bit of physical change, so things like bathroom facilities, transportation, and so on that we've had to provide. But aside from that, it's gone very well. I was at site back end of last year and chatting to the team down there, both male and female, and I think it's been really welcomely received. I think it's been a real breath of fresh air. I think it's been well received by the incumbent workforce, and I think the female employees that have joined us have welcomed the challenge and have been welcomed and feel very much part of the team as well. So no, I think it's been a huge success.
Wonderfully good to hear. So one for you, Ross. How does, again, quite a large question, but how does CENTAMIN calculate minority interests on the income statement? And why has this number been so small in recent periods?
Thanks, Alex. Yes, so the minority number on the income statement basically represents the EMRA share. That basically we consolidate all the accounts on our basis and show the outflow for EMRA in that line item. The reason why it's dropped recently is because we've been in a cost recovery stage. So in previous years, we've basically fully cost recovered. Any outputs that were coming from the mine itself were shared in that 50-50 profit share arrangement that I mentioned earlier. But when we've invested in the mine and we've gone through this reinvestment period, we recover our costs on a scheduled basis as it's contemplated in the concession agreement, and then any residual gets distributed as profit share. And that's where you see that minority distribution line going through. So it will ebb and flow depending on, I guess, where we are in that cost recovery cycle and how those distributions are made.
Wonderful, thank you. A question here on the shares, so which Martin and Ross, if you don't mind, I'll take. But why is there such a huge disparity between CENTAMIN's share price on the Toronto Stock Exchange and the London Stock Exchange? And are all shareholders eligible to receive the dividend? Answering the second one first, yes, all shareholders are eligible to receive the dividend. You do need to make currency elections as to what currency you do want to receive it in, and those details are always within our dividend declaration announcements. With regards to the disparity between the TSX and LSE, the shares trade on both exchanges. The shares are fully fungible, but over 99% of the shares and therefore the liquidity is on the London stock exchange. So therefore, there is a much less volatility in the share price than there is on the Toronto Stock Exchange, where if one share, two shares, trades, it can move the share price quite a bit. So the volume and the liquidity sits on the London Stock Exchange, and therefore why it is less volatile. So hopefully that answers that question. Martin, just to check, are you back on? I can hear you, but I can't hear you through the
So,
webcast.
Martin, if I just request control, just to bring you back through again.
Apologies for this technology working against us.
No problem at all.
I will, while you're helping Martin get back online, I'll take one other one that has been answered. It says, ironically, it says, so when will you, the CEO, appear on Bloomberg? We won't necessarily be appearing on Bloomberg, but actually, ironically, later this afternoon we have a meeting with the Bloomberg intelligence team to introduce them story and bring them up to speed. So it's very much a relationship that we're building.
Am I back now, Alex?
Yes, you are. Welcome back.
Well, I think my wife would point out I have a face for radio, so I think yeah, we'll get round to Bloomberg, but yeah, seeing him this afternoon, and I think a face for radio.
Great.
Sure.
So unless any come through the webcast, there are two other questions. One which is it's a disclosure point, but I'm going to read it verbatim. Are there any negative issues that shareholders should be made aware of but have not been disclosed to date?
Okay, I think that's relatively easy to answer. Look, clearly, we have our sort of internal policies around sort of regulatory disclosure. So that's the first thing, and then secondly, of course, being listed on the both LSE and the TSX, that we are required under the obligations of continuous disclosure as well. So if we were not disclosing anything that needed to be disclosed, then I think we'd be in all sorts of legal trouble with investors and the exchange and so on as well. So no, I think I feel very comfortable that as a properly run business with appropriate controls and checks and balances internally, and the requirements of a properly run exchange in London and Toronto, that I think safe to say that we fully disclose all material information at all times to shareholders. Ross, as my fellow executive director, do you feel comfortable with that as a statement?
Absolutely. No, I think the answer is no.
And then the last one, are Centamin moving in the right direction in terms of growth?
Yes, I honestly think we are. I do. I see that the sort of phases that I think about sort of 3 years of sort of I've been on board now, is that the first year was kind of the discovery phase. Where are we? What are we up to? What are the challenges? What are the opportunities? I think the second phase was then starting to either address the inadequacies or start to realise the opportunities. And I think this third phase of the time now is start to see the delivery, one of where we've addressed issues, the consistency coming through those, and where we see opportunity, the development to the ability to deliver those opportunities, reserve growth, underground expansion, solar plant as well. So I think that sort of when I think about Sukari that way, I think EDX is a great opportunity for us to leverage up our position as Egypt's only producer with an established operation there, and I think we've got a large land package where we've got a real advantage there, and I think bringing the Europa to account as well. So I think we've got that internal growth pipeline, lots to do, and I think we've got both the technical and the financial capacity to deliver that growth. And as I mentioned before in the M&A question, is that I think we're now also in a position that if we see an ability to accelerate that growth opportunistically, then I think we're in a position that we could act on that, which I think possibly might not have been over the last 1 or 2 years from there.
Thank you very much. Oh.
Martin, Ross, Alexandra, I was just going to say thank you very much for being so generous with your time there. You got through a lot of questions, and of course the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Martin, could I just ask you for a few closing comments?
Look, thank you to everybody for taking the time. We really do value one, the sort of the interest in the business, and two, the feedback and comments and questions you have. And I think it's important that Yes, obviously we talk to the institutional investors that own a significant part of the register by value, but I think also recognise that the retail investor is equally important to us. Everyone owns a share in the business, and I think it's important that we listen to comments, to questions, to concerns, to queries. I think it's important that we answer those as quickly and as detailed and as thoroughly as we're able to, either through knowledge that we have or an ability to share what can sometimes be confidential information that we can't do that. But I think it's important to hold these events, and I would encourage the audience today and the broader audience to continue to engage via the channels that we have out there through Alex and the investor side. As we said last year, I remain very happy to maintain this regular forum whereby we can look to answer those questions that we have as well. So look, I think your support is very much appreciated and continues to be so. I do believe that a good 22 has been delivered. I think there's a real sense of excitement and togetherness and unity and direction at the various operating sites that we have. I think that's been reflected in results, and I think that's been reflected in a broader sort of recognition now externally. I think with the share price performing, yes, that's in part gold price, but if people want to play in the gold price, they're going to pick stocks that they believe and have confidence in. So we've put ourselves in that position now where we're able to sort of start to capitalize on that. So I think we've built a great platform at this point of the last 3 years, leveraging off the success of the past. I think we've re-established that foundation, and I think now it's exciting to go on and really kick on the business from here as well. I think there's huge opportunity. I think it's in a supportive gold price environment. We've got the headwinds of inflation and sort of global uncertainty to push against, but I think we can navigate that. Look, I'm personally very much looking forward to this year and the medium to longer term as we continue to sort of try and deliver that growth and maintain that dividend as well. So again, thank you to everybody for listening in. Thank you for your continued support. Please do keep in touch. Please do keep engaged. We'll look to hold fairly regular meetings like this to make sure that everyone feels that they've got a voice and that they're being listened to and being addressed. Look forward to addressing you in the future as we go forward. So with that, I'd just like to say thank you to everybody. Wish you the very best for today, and look forward to engaging in the future.
Martin, Ross, Alexandra, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of CENTAMIN PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.